Latest business news. Marcus Carstner is here, starting with smartphone rivalry between Apple and Samsung.
Yes, you're right, Chris. Hi, everyone. That rivalry is heating up in China between Apple and Samsung. The world's biggest network operator, China Mobile, has started selling iPhones. It's the first time that the operator carries Apple handsets. The American electronics giant has been trying for years to get a bigger foothold in the Chinese market, where it's been trailing Samsung. Apple is hoping that China Mobile, with its more than 700 million customers, will change its fortunes. Delana De Souza has more.
After a 6-year engagement, it's finally happened. China's largest mobile operator began selling Apple's iPhone to millions of customers. It ends a long wait for the technology giant, eager to increase its market share in China. The company believes the country will be its biggest market in the future. According to some, how well this partnership does will only be seen with the release of the iPhone 6 out later this year.
You got to think, I had the iPhone 5 out for, more than a year. And it's just now coming to China Mobile, so it's not new enough, right? It doesn't have enough wow factor anymore to really move the needle, even at China Mobile.
China Mobile has a customer base of 760 million and is currently rolling out what it says is the world's largest 4G network. Analysts say 4G connectivity is crucial to the success of the iPhone in China. Meanwhile, China Mobile will have to persuade existing customers to pay higher prices for 4G services.
It only took the 3G network 2 or 3 years to attract 200 million users, which is very quick. So I think the development of 4G from its initial phase to its maturity won't take long.
Analysts warn that Apple risks trading competitors offering a range of phones at cheaper prices. In the third quarter of 2013, Apple had 3.5% of the smartphone market in China, falling behind rival Samsung with 18%.
Now, there are reports that the response to China Mobile's iPhone launch was a little bit muted, and that may be the reason why Apple shares were heading south on Wall Street during Friday's session. That, in turn, put pressure on the Nasdaq. Industrial shares also took a hit during the session after General Electric reported earnings that disappointed investors. Still, though, the Dow Jones Industrial Average in positive territory at the close, whereas the Nasdaq and the S&P 500, they were in negative territory. Let's also take a look at the state of European stock markets at the close. All three main indices in Europe closed with gains. Both the London FTSE and the Paris CAC 40 up around about 0.2%. The Frankfurt DAX performing ever so slightly better, up around about 0.25%. And looking at some of the reasons behind the gains that we just saw there in the European markets, British stocks, they got a boost as shoppers kept the tills ringing during Christmas. Retail sales in the UK jumped 5.3% in December in comparison to the same month in 2012. That was the fastest growth since October 2004 in the UK, and it's fueling hopes that the economy as a whole is perking up. Not much of a perk, though, for shares in Royal Dutch Shell. They fell back after the company issued its first profit warning in 10 years' time. Shell said its fourth quarter earnings will come in near $2.9 billion. That's $1 billion less than forecast. Shell blames security problems in Nigeria and also higher costs for exploration. Courier company UPS has also warned that fourth quarter profits will be smaller than expected. It doesn't come from a lack of business, though. UPS says a surge in last-minute orders held up its system, which meant that many packages missed their delivery deadlines. Bad weather also affected the bottom line of the American firm. And finally, a story to keep an eye on ahead of next week. A deal that would see China's DONGFENG take a stake in PEUGEOT-CITROEN could be close. There are reports that the French company's board will meet on Sunday to discuss that potential deal. Sources speaking to Bloomberg say the deal would see DONGFENG inject at least 500 million euros into the French car maker. The French state would also add 500 million euros and get a stake in return. PEUGEOT-CITROEN is looking for partners as it's trying to turn its loss-making business around and also to boost sales. A story to keep an eye on there, as I say, and with that, I'm going to send it back to you, Chris.
Thanks very much, Marcus. Now, French rock star Johnny Hallyday is the target of renewed attention over his finance.